children that are interested in learning about how to deal with bullies, get with me, and this is volunteer free of charge.
Great, Roger. Thank you very much. Thank you very much. Let's see, Michael, John, do you want to say anything? We're going to get you later on. Michael, come on up here, please. Saw his little ad on Facebook. It was very nice and well presented.
I'm Mike Stewart with Data Management Systems. I do special kind of websites, design, and but the bottom line is it gets high on Google, and that's a very important thing. But I've got a timer so I can actually know when I'm up, and time is almost up. But basically, call me if you're tired of not being found on Google. There you go.
How about look back here? He's doing pretty good. He's got a little advertisement. It's not a little advertising. He's got a little clock going back there, so yeah, you can't help it. Notice that. All right, Lisa. I know you're going to come down front. And guess what? I know this one is going to go quick.
Good morning, everyone. My name is Lisa Kane. I'm with CSS Connects. We do an amazing job at putting together large events as well as small events, trade shows, and expos. Our next one is April 21st. It's Who's Hiring Memphis at the Botanic Garden. And then our big show for this year is Christmas in July at the Agri Center, July 10th, 11th, and 12th. If you are a business and you have anything that you want to sell or you want to get your message out, join us.
That really was pretty good. Now, after I laughed, Eric started her out at 15 seconds. He started out 15 seconds. So anyway, well, let's get my lovely wife with Allstate up once again.
My Allstate hat. Right now we have a promotion where we are giving $10 gift cards if you refer somebody to us. And there's many people in the room that, whether they purchase the insurance or not, there are many people in the room that have gotten quotes from us, and we're the first to say, if you do better elsewhere, we're going to send you or tell you to stay where you're at. So when you're with Allstate, you're in good hands.
All yours. How about that, folks? Right on the spot. Is she not good or good? Well, let's get this lady that is, if people like volunteering, this girl is an inspiration to each and every one of us with all the causes she takes on. I don't know how she finds time and how she stays so young working this hard. Let's give her a welcome. Wyatt Churchill.
Good morning. I'm Wyatt Wood Paris, and my company is Wyatt's Joyful Company, surrounding volunteers. As you can see on here, when they show the pictures of their children and their dogs, this is a picture of the state capitol where I was yesterday. And somebody said, yeah, we know why. She's the talker. And I want to just tell you, I would like for you to listen to my program tomorrow, Wise Ways of Wellness. And I will have Patrina Singletary. Some of you all know her. She's an ultimate foundation person. So get the number, 347-850-8560.
All right. You know, it's the pressure of the clock. You kind of like want to say something, and all of a sudden you're looking at Eric and starting early. Miss Gwen Churchill.
Good morning. I'm Gwen Christensen, the owner of Builders, Floors, and Interiors. We are a floor covering company near the Wolf Chase Mall. We sell all floor covering, and I will give you all special pricing if you give me a call. I've worked with several people here, Gwen particularly. I'm working on something right now for Lynn. So I'm Gwen Christensen with Builders, Floors, and Interiors. Thank you.
Thank you, Gwen. We have a new location for this lady out in Collierville right now. So anyway, it's really good. Come on up. We haven't seen her in a long time. Let's give her first time roll. Very well.
My name is Ruth Kern. I work with Attorney Cotton. We just opened Cargill Title back in September. Attorney Cotton was running for alderman back in October, but he saw otherwise. So I've been doing real estate closings for 16 years. Joe actually works for Evolve Bank and Trust that used to be Delta Trust Mortgage that used to be in this building. And American Title used to be right across the hall here at Suite 100. So I've got my stamp with me. If anybody needs anything notarized, let me know. I'm your gal. Thank you.
Thank you. It's really great, Ruth. Thank you so much. Good to see you. Same here. Well, this is a girl that never passes the 20-second. Never hears the bell. Miss C, come on up here. Let's give her a welcome.
Good morning. My name is Carol Murray, and I help busy people leverage their time by saving money and adding money to their bottom line. My phone number is 901-581-6755. Thank you.
She always does well. Here's my traveling buddy that I see occasionally at the estate sales. Lorraine, please.
Lorraine Ferguson with Wilder Systems, and we do computer networking for anyone in town, everyone around, a lot of small businesses, medium-sized businesses, and we'd love to help if anybody needs help. We are going to be going strictly mobile and reducing our size from our 1800 Union Avenue. Change that. Move.
Don't you like the pressure of Lorraine, the pressure of the clock on you? Michael, here's our traveler. He gets here when he can. He's been all over this country. Michael, please.
Good morning, everybody. My name is Michael Thomas. I'm a real estate investor. I'm also a private lender. I just got back from California, getting stuck there for 2 days. I know y'all hate that. I was stuck for just 2 days. But anyway, I just want to let you guys know we are private lenders here in Memphis. We also lend money in other states. So if you know anybody for some money to do projects, just give me a call.
He gets here, when he can. We were talking about how often, his business here, right? Well, here's our top of the morning, man. Kevin, come on down, dear. All right. Warm welcome for Kevin.
Thank you. Top of the morning, everyone. Kevin McDonald of Renaissance Associates. We buy, we rehab, and we manage primarily residential real estate. So always looking for good deals and people to work with in that respect.
Thanks, Kev. We've not seen this guy in quite a while. I know he's doing all entrepreneurial type things. So anyway, let's give a warm welcome to Rico, Coffee Man.
Good morning, family. It's been a while since I've seen you, so it's good to see you again. I'm Rico Johnson with BetterLifeBetterCoffee.com. I've been away working on myself, personal development, and a whole lot of other areas in my life. So anyway, yeah, I have been working on it as well. No flour. Trying to work on the sugar right now. But anyway, you guys, if you all want to network with me, I would love to work with you, show you how coffee can increase your business by getting more sales. Thank you.
He does look good, doesn't he? He has lost some. All right, confectionery one more time. You got one more thing, and then we get our speaker up here.
My other bit of big news for the week is that I have signed on to run the concessions for Todd's Auctions at Summer and Highland. So if you like estate sales, they're really cool. I bought Sabina a really cool necklace. It is the first Monday and every Thursday and Friday, starting in 2 weeks. The 15th is the last day that their current concessionaire will be there. Then I take over. So I'd love to all have y'all.
Great.
Oh, and Sabina is now working at FedEx.
Great.
Well, I promise not to embellish what John wrote.
Thank you, Troy.
And he said, well, it's not over till he gets up here to see if I really changed my mind. Oh, please, yes, far back corner, please, come on up here. I'm sorry I missed you coming in.
I was writing down this estate sale information.
All right, well, good. Please, come on up.
Good morning. Happy New Year's. This is the first time I've seen you this year. Jay Henderson, blogger, book author, public relations and marketing specialist, and voiceover artist. If you're interested in more information, check me out at putitinwriting2.com. Thanks.
Good to have you here. Thank you so much. All right, well, let me get on with John Keller out there. Let me see what I can say about this looking button in his jacket, officially looking good. One of the most handsome guys we've got in this organization, along with myself, of course. About 30 plus years, doesn't look that old in the financial services industry. He's been in Memphis also for the past 30 years. Listen to these awards: CFP, CPA, CLU, CLFC. And a registered representative with Edward Jones. He's married, of course, to his beautiful wife, has 2 children, and let's give him. He's always has a smile on his face, and I'm really looking forward to hear what is happening in the financial industry. So listen, let's get him on. I'll get him up here and start him talking. How'd I do? I stand wide, of course. Fabulous. You get an A for truth.
That was hard.
Can we raise the screen? I don't know that I'm going to draw, but just in case you need to, I just don't know I'm about to run into that. Well, I'm going to talk about 2015 market outlook, and that can be really dry and boring, so we're going to keep it anything but that, and I will talk less, and we'll throw it open for questions and answers, because as a registered rep, I have to get approval for anything I say, which I do have approval for this presentation. But again, it's a company presentation, so it's kind of somewhat interesting. So we can do whatever we want to, and we go to questions and answers. So we can do that whenever. But typically, to understand 2015, let's look for a moment at 2014. The market was up, both stocks and bonds, which is somewhat interesting because typically when stocks are up, bonds are down. When bonds are up, stocks are down. But we preach diversification. We think that modern market portfolio theory is true. That the more diversified you are, the better protected you are in your financial investment. And if you did that, guess what? You didn't do well with small caps or international investments. So the thing that was up the most last year was the S&P 500. Pretty good year. Not as good as 2013, which was a fabulous year. But still, all in all, it was good. The interesting thing that we're looking at right now is historically, and this is just averages, so kind of take that with a grain of salt. But we look at history and we can kind of gauge our expectations. That's my hardest job, is to work with my clients and help them have right expectations. If you're saving, if you're investing, you're wanting something from that. You want that to do something for you, do you not?
Yes.
I mean, hopefully, I look around the people I see in this room week after week, you're very hard workers. I mean, you're doing whatever it takes to make your business successful. And you want your money to work as hard as you do, if not harder. So when it comes time to retire, the income you want, the retirement you want will be there. Well, you have to have certain legitimate, reasonable expectations for what your money can do and what it can earn. Well, the averages are about 3 times a year the market will go down about 5% on average. And about once a year the market goes down about 10%. Now, if you think about where we are on the Dow, that's 18,200 this morning before it opened. So if we were to drop 1,800 points, the news guys would just be wringing their hands going, oh my God, the market's down 1,800 points in the last week or 2 weeks or whatever time frame it happens, right? And that would be normal. For us to go down to about 16,000 something would not be that unusual looking at history of the market performance. About once every 4 years, the market goes down 20%. So if we went down to 14,000 something, oh my God, the market's down 3,600. What are we going to do? It's the end of the world. What will the president do? What will Congress do? And in reality, if you look at history, that would be the norm. Well, here's the curve in all that. Over the last 40 some odd months, we have not had a 10% pullback. In October, we got close. We had a 9.9% pullback. Okay? So in over 40 months, we have not had the 10% pullback that would traditionally or historically be the average. And there's some reasons for that. And part of that is kind of why we're very bullish on 2015 in general. We think the market's going to continue to go up. The reason for that is U.S. companies in the S&P 500, those companies, their balance sheets have never looked as good as they look right now. Companies have paid down debt. They've pared their ranks. They've gotten rid of employees that aren't that good. They expected the economy not to be good. And we bottomed out in 2008, and since 2009, we've gotten better and better and better. The economic employment data has gotten better over the last 5-6 years.
companies are making more money than they've ever made before, and that's really one of the main price drivers of the stock market, is how much money is the company making. If the company's not making money, why should it be worth anything? We kind of learned that the hard way back in '99 when we had the tech bubble. There were technology stocks that went from like $1 to $2 to suddenly they were worth $20, $30, $40, $50, $100. They weren't making any money, but it's the new economy. Everything's going to be done on the web. Brick and mortar, oh, that's old school. They weren't making any money. Guess what happened? They went to zero. My brother was in New York. He was a money manager up there, and he said, John, you could get millions of dollars by just sketching out an idea on a napkin at a restaurant. People would throw money at you because you had the latest, greatest idea of how you were going to be able to use the net. And they were getting all these lofts and this warehouse space and just putting in rows of desks and computers and people programming stuff. And just, in a matter of a year, like poof, all that was gone. Because if it's not making money, it doesn't really have any value. And that's kind of, your business is. You got to show a profit, right, to be able to sustain your own lifestyle. Well, for a business to exist, it's got to have a profit. And that's kind of what we're looking at. Like at Edward Jones, we're wanting people to buy stocks, to buy mutual funds that are consistently showing dividends, returns of the profits to the investors. That's what a dividend is. Particularly at retirement, we're focusing on companies that not only pay you a dividend and have a history of paying a dividend for 20, 30, 40, 50 years, but hopefully increasing that dividend every year for 20, 30, 40, 50 years. And there are companies out there to do that. So that's kind of what we look at when we're doing financial planning, retirement planning for our clients. So in 2015, we're looking for, continued economic growth, continued improvement in the employment picture. We're looking for companies to continue to make money. We're looking for actually increased volatility. We didn't really have a lot of volatility last year. What's interesting to note, I think the Fed chairman she just spoke to Congress and said, yeah, we have no intention of raising rates. And it's hilarious because usually before she speaks, the market will usually dip maybe 50 or 100 points in expectation of her announcing they're going to finally raise rates in 3 to 6 months. And then when she says, no, we're not raising rates, then the market takes off 150 points. So, it's like the stock market typically is a 6-month leading economic indicator. So right now the market's up thinking, okay, companies are going to continue to make money for the next 6 months. But if the market were to go down 200, 300, 400, 500, 600 points, 1,000 points, it's because they believe that in 6 months, these companies, when they start doing their earnings reports, aren't going to be making as much money as they were. Therefore, they shouldn't be as valuable as we think they are today. Right now, we think they're worth they are today, so people are bidding up the stocks because they think they're going to make even more money over the next 6 months. That's typically how the rule of thumb to look at the stock market. Most of you probably, maybe catch it and go, oh, it's up, it's down. Who cares? I got to get to my next appointment. Right? You get your monthly statement, or you get a quarterly statement, or you look at your statement year over year. April 15th, IRA deadline. Maybe you're making an IRA contribution or a SEP contribution to your retirement plan. And you say, what did I do? Well, what has my investments done? So that's when you kind of look at it. Hopefully you're meeting with your advisor, if you have one, at least once a year to say, hey, what's my money doing? Why is it doing this? Should I make some changes? What we do at Edward Jones is we ask you not really what you want to invest in, but we ask you, what are your goals? Where do you want to go? Where are you now? Where do you want to go? Let's see if we can figure out a way to get you there. And if we can do that, then the next stage is, well, what's your risk tolerance? What kind of fluctuations are you willing to stomach? I was talking to a client this week, and it was like, he was like, well, yeah, I want to keep up with inflation or make better than inflation. I said, okay, well then the next question was, well, if the market was to go down 20%, what would you want to do? Would you say, let's go cash, or would you want to put more money in?
Everybody's thinking.
Yeah.
It's a risk.
Right. It depends on your risk tolerance, and it's kind of your expectation. We kind of ran into that in 2008 when the market went down 40, 50%. People were, they had, $1 million or $500,000 put in the amount of money that you think you should have at retirement, and suddenly 40% of it's gone. You've got $1 million IRA, Troy, and you get your statement, and now it's only worth $600,000. That's heartburn, right? Mm-hmm. But if you're invested in a way that you're still going to get the income from that, even though the underlying investments have gone down, your income doesn't go down. In fact, maybe even continues to go up. You really don't care. I've got some clients, they actually have over $1 million with me. They never ask me what their portfolios were. They're asking me, how can I get more money this year? They want income. They're in retirement. They don't care what they're worth. They want to know how much income they're going to get year after year after year. Now, yes, it's important what the value is, but just your, ladies, when you go to the store and they say, ground beef, 50% off, or ribeye steaks, 50% off today only. What do you usually do?
Stock up.
Stock up. Oh, you buy more than what you normally would. Oh, interesting. So if I told you that, Chevron or Conoco or Exxon were 30, 40% off their 52-week high, oh, you might want to buy some. And because next week the sale may be off and it's going to go up in value. Oh, and by the way, they're not changing the dividend. The dividends are still there. So the income you would get if you paid $100 a share, or you get it today for $60 a share, you get the same income, and probably next year you're going to get even more income. And the next year you'll get even a little more income. How many people believe gasoline is going to stay where it is? 100% answered, don't expect that. Okay, right. So, yeah, they're not making as much money as they were last year. So their profits are down, their stock prices are down. But guess what? When oil goes back to $100 a barrel, and their profits go back to where they were a year ago or 2 years ago, their profits are going to be back up there, and their stock price will go back up. So, right now we're running a sale on oil and gas stocks. Some other things are overpriced. You wouldn't want to buy it. So that's kind of what we do. Let me cheat and look at some notes here. All right. That was 2014. Already talked about this year. We think that, looking at, the stock market, we think it's good. Bond prices, that as interest rates rise, a bond value goes down. Of course, if you had a bond, you paid $100,000 for it, and it pays 5%. Hang on to it, because they really aren't out there. But anyway, if you had a bond that paid 5%, interest rates went down to, say, 4%, the value of that bond actually would go up. It's inverse related because you're getting a guaranteed 5% every year, but the expectation is you should get 4%. So that $100,000 bond is worth more than $100,000 because it's paying more than 4%. Well, the opposite's true. If you have a 5% bond and interest rates go to 6%, that $100,000 bond is not worth $100,000. You're only going to be able to get, say, $94,000 or $90,000 for it because people will. Yeah, at least now. At maturity, you get all your money back. But that's saying that's the market value if you wanted to cash out on a daily basis, right? Because whatever the current yields are, that's what you expect to get. If 5% is the expectation, anything that's paying less than that, it's worth less. Anything that's giving you more than that, it's going to go as a premium. So that's why there's so much interest in what the Fed's going to do, because what we've seen over the last 4 or 5 years is they've artificially kept interest rates down. I mean, think, getting 0.00 on your savings is normal. No, it's not, right? Well, they're doing that to try to stimulate the economy and get people to borrow money. Joe's trying to get people to borrow money to buy a house or refinance a house because historically a 3, 3.5, 3.9 That's pretty low for a 30-year mortgage. That's fabulous for a mortgage, actually. I mean, the first house I bought, I think I paid, like 11%, 11 and 3/8 or something. And it was like shocked at when I could refinance, at 9, jumped on it, and just steadily refinanced. And Joe even helped me one time and refinance something that got me out of the deal. And it's there, okay. And if people want to make money, I tell people that the number one job of a CFO of a company is to keep his job. So if you're a CFO and you're running this company, or you're running the finances of the company, and you're looking to the CEO and to the board, and they're saying, well, should we build this new plant? Should we hire all these new employees? You're probably saying no, because until we know really what the for sure tax policy out of Washington is, until we know for sure what our healthcare costs are going to be, let's don't build that plant. Let's don't hire more employees. We've got everything under control. We're stockpiling our cash, even though we aren't earning anything on it. That's what they're going to come back to. So what's he going to do? He's earning 0 point nothing on the cash. So what's he going? He's going to go to the market and look for some sort of investment that's got this 3%, 4% dividend yield. So all this cash is going into the market. You get some sort of yield because you expect some sort of return on your investments, right? Now, once that changes, once tax policy is a little more secure, once healthcare costs are a little more secure, you may say, now it's time to build that plant. We can borrow the money at, 3-4%. We can hire the employees. We know what our healthcare costs is. They do these 5-year projections, 10-year projections. So that's kind of what's holding back a lot of business. That we've got a huge number of people that aren't employed that could be employed, and so we've got the potential of growth in our economy hadn't been tapped yet. A lot of companies that have gone offshore are coming back to Iowa, to places that have a very secure power grid. They have an educated workforce. And so a lot of businesses are quietly coming back to the U.S. and building up their U.S. base. In investing internationally, historically, you want more money on your international investments because you have currency risk, you have political risk, you have a lot more risk involved on the international. So historically, you get more. But generally, you don't really put more than about 5%, maybe 10% of your money in that higher risk category because it fluctuates so much. So we're kind of cautious about international investing, even though being properly diversified, you should have something, but there are certain risks there that the strong dollar hurts us because when we earn money in pesos or whatever currency it is, and then have to convert it back to dollars, the dollar is gone up in value, which is great when you're a tourist and spending money in Europe or wherever you like to go, but it's not so good when you're investing and having to convert it back to dollars. So yes.
And elections coming up, and that historically affects the stock market. What do you predict with the upcoming election next year?
Well, that's 2016, and unfortunately, that has already kind of started the election talk. We'll have to see. It's going to be a bruising election. I'm trying to be careful. They're filming this. I think that again, what are the fundamentals? The fundamentals are our economy is slowly improving. I think last year, the third quarter, we had 5% growth. We're not going to sustain that. But what that means is that more people are employed, more people are working, and companies are making money. That's really, people vote their pocketbook. So if you think that candidate A is going to do this to help you and your family, you're going to vote for them. If you think candidate B is going to do more to help you and your family, your business, you're going to vote for them, whether it's local, state, or federal. So I think it's candidates for either party are going to have to make their case of how they're going to grow the economy.
But the employment figure is really the story right now because they don't count the people that are no longer looking for jobs. So that's very distorted.
It is, and that's why I said I think the potential of people who could work is there for people to expand and grow. And I think we've got to create an environment for companies to want to expand and grow. If it's going to penalize me to hire people because my health care costs are punitive, if it's going to penalize me because whatever profits I make, I've got to pay more in taxes, I'm going to look for some way to offset that. Because even businesses have to invest their money and make a profit. Yes.
John, a couple. Could you address two? I have two questions. One is the China government manipulating the currency to look better. How do you think that? I know we'll put some pressure on them to let it go back to market value. And then also, you see some companies there that are saying they're buying back their stock. And of course, the idea, well, they're buying back their stock at such a price, it must be a good deal. Can you address those two questions, please?
Okay. Those are rather involved, but I'm going to try to give short answers to those. I probably won't do them justice. But like for China, right now China is about 50% of the world's demand on commodity prices. The Chinese economy is slowing down. They're trying to kind of hedge and keep their economy under control because for a while there it was growing way too fast. And because it's communist, but it's kind of a controlled capitalism type of economy, it's not the norm that we see elsewhere. So it's manipulated anyway. But it does have an effect on the commodity prices, and China and India, with 1 billion people each, are huge markets for American companies. Johnson & Johnson, Procter & Gamble, they're trying to figure out how can they get in there. So their currency issue is one of the major issues they have with people trying to do business with them. But in the long run, I think that's going to kind of have to take care of itself because you can't manipulate your currency and have long-term relationships with other countries. The other issue was
buying stock. You see these companies that go out there and say, "Listen, we're buying back $3 billion."
The issue with companies buying their stocks is basically management saying, we think we've got a great enterprise, and we think our stock price, if it's at 50, we think it ought to be at 75. So we're going to buy it at 50 because we need it for the 401k plan, we need it for executive bonuses, we need it for stock option plans, whatever. We're going to buy back that stock at 50. Now, what that does from an accounting standpoint is take those shares off the table, and in a way it kind of helps them manipulate their earnings per share figure because now their earnings are going to be better because there are fewer shares to divide into the profit. So the more we buy back the shares, our earnings, assuming we're continuing to make the profit, if we make the same profit, it's actually going to be better this year than last year if we take, 1 million shares off the table. Yes, sir.
You mentioned earlier bargain stocks being on sale, which also means you're looking for dividends. Much like in real estate, when you do an investment, you look for capital appreciation of the property, but also cash flow.
Correct.
Would you discuss a little bit about how you look at that relationship between potential for appreciation and dividends, and what sort of dividend rate you see as good in today's market?
Yeah. The average, I hate that word now, on the S&P is typically around 3% historically. I think right now, because prices went up in the last few years and they haven't raised the dividends as high, it was like 2.8 or 2.9 the last time I looked on the S&P 500. So we're kind of expecting companies in 2015 to raise their dividends based on the profits they made. Typically the board meets in January and sets their dividend rate for the year. Like Johnson & Johnson, if you want to research, if you look at Johnson & Johnson, look at Procter & Gamble, look at AT&T, they have really strong dividend percentage rates. So anytime you can get 3, 4, 5%, AT&T was over 5 earlier last year or later last year. And there's certain ETFs that pay out that buy preferred stocks. And so you kind of have to balance that, and why are they paying? There was one, Transocean was a rigging, oil and gas rigging company. They had a 7, 8, 9% dividend, and their stock is down 50, 80% because people aren't, with oil at $50 or $40, people aren't going to the North Atlantic or in the Caribbean or wherever to drill, so they're laying off people. Part of the oil industry is laying off thousands of people. So that's the downside of oil prices. Some people are losing their jobs. So it's kind of looking, again, going back to the diversified portfolio theory, is looking at quality companies that have a history of paying dividends, preferably rising dividends, that over the last 20, 30, 40 years have made money. Again, I would say like an obvious one, Johnson & Johnson, Procter & Gamble, Chevron, Conoco, those type of companies that have dividends, that have raised their dividends. You can build a strong portfolio if you like individual stocks. Let me quickly say this, I'm out of time, is that, as an individual investor, you can do three things. You can either buy stocks, which can tend to be risky and somewhat expensive if you're starting off slowly. Number two, you can buy mutual funds, which is professional management and get you the diversification. Costs you a little more on the front end, but over time, if you're talking 20 or 30 years, actually you can come out pretty good on that. And the third way to do it, which is the most expensive, if you've got 50,000 minimum, usually most funds charge once you have at least that. There's what they call managed money, or basically they have professionals who pick the best of the best funds. They rebalance regularly for you, which is one of the number one things you need to do. And that's really what if you haven't heard from your rep in the last 12 months to rebalance your portfolio, you need to fire. But and that's typically what, no matter what firm you deal with, those are the three choices you're going to have. So depending on how much money you're starting with and what your goals are, that's what you're going to look at. So in any of those strategies, you can utilize a rising dividend stock strategy. Thank you, Joe.
Very well done. It's always nice when you hear you, with all you folks having those $1 billion investments out there, to get somebody that knows what he's doing out there. And boy, if you got any extra money, he'd certainly be the man to go with. Before we get Marcel up here and do our drawing for our charity of choice, let me say hello to somebody we have not seen in quite a while. Anytime I saw this guy, he was Mr. Positive, always a smile on his face. Felipe, come on, tell us up. You got 20 seconds. Tell me a little bit about what you do. You brought a guest, Donald, I understand. Come on up here. Get up in front. Just give him a warm welcome. We haven't seen him in about a couple of years.
Well, the reason we're late is because you moved. We went all the way over to Quince, and then we were told it was over here. So anyway, our apologies for coming in late. And I'm never short of words, and I didn't recognize you. You changed. You didn't even have your glasses on when I first saw you. But I can always recognize you too. But anyway, it's good to be here. Very good to see you. And somebody, Eric. Yeah. Stoltz. Good to see you. Mark, I'm sorry. But anyway, it's good to see everybody. And what I am doing now is I just was appointed area assistant director with NARP, which is the National Association of Retired Veteran Railroad Employees.
Oh, good.
So anyway, we're doing that. This is the president of the local unit, Donald Harrison. He and I both are former railroaders. I retired in 2007. He retired in 2011. Yeah. And I'm done.
Very good. Well, let's get Marcel up here. But how much do we have for our charity of choice? What's the spot?
And Troy, she didn't get her 20 seconds today.
That's okay.
Oh, yes.
Give me 60 next week.
Okay.
Come on.
The last three numbers, 494.
Anybody?
All right.
Excellent. Thank you. Thank you, Why. Very good. Well, John also has come up with a gift. Can you tell us a little bit about this gift certificate?
It's Starbucks. So,
all right.
If I can have a cup of coffee with you, I'll talk to you for an hour.
Well, good. All right, let's go.
John, please, you don't have to.
Come on, John, you know what you're going on there. Beverly Clark, once again.
I'm a winner. I'm just a winner.
There you go.
Thank you.
All right, and don't forget, next week we've got, this is going to be exciting, folks. Let me get this up here so I know exactly what I'm saying. This is exciting stuff because we always
a lot of new folks here. A lot of new folks are going to be here.
Yeah, and it's a panel, and it's really been lots of fun. You hear just a great deal, but Anyway, it's tips for a smooth real estate closing. Look forward to see you come on back too.
My
So anyway,
horses are cheap. I'm $5.50.
I like that extra advertising to get it. But anyway, folks, thanks for a wonderful time. And how do you like our new room here? So anyway, folks, with that, we'll call this a conclusion. Everybody watch the weather tonight. It's going to get kind of hectic out there.
This room is what? Is this university?
Yes.
Yeah.
And it's expandable, Lorraine, so we can have 100 people in here, and we will.
So thank you to the University of
The
Phoenix.
University of Phoenix. So when you get the chance to see those folks out there, walk around, say thank you. With that, let's call it a day. And anyway, safe driving tonight, folks. We're in the insurance business, but